All right. Hello, everybody. Welcome back to another episode of Robin Hood Weekly. This is episode number 5. Thank you, everybody, for being here today. I'm here with myself, Tanner, and Roy, who's back from a vacation. Roy, how are you?
Glad to be back. No place like home.
No place.
Boys in the hood are back.
That's
The
right.
Boys in the hood. Yeah.
I think I told Tanner this, but so the entire time I was gone, I wasn't completely unplugged, but I mean, we had terrible internet and it was family time anyway. There's one YouTube video that I watched the entire time, just one. And it was last week's episode of Hood Weekly.
With our guest, right?
And he was amazing, yes. He out-spreadsheeted Tanner, which is just, got to give it up to the guy.
Joshua was great. It was a lot of fun.
No, Josh was awesome, brought a new perspective. And because of the December numbers we got, he was pretty much right on his assumptions as well, which is really good. But yeah, Boys in the Hood are back. We got a lot of stuff to talk about today, a lot of topics in regards to New Year's Eve and Robinhood's giveaway, regulatory fees, some new products that the community dug up, and they might be being announced on the new Robinhood Gold events that are going to be happening later this year. But let's start off with you, Roy. You got an interview with the man himself, Vlad. What was that like? And any updated thoughts on Robinhood, the company, at all?
All right. So, yeah, it was an amazing interview. Getting to talk to Vlad, it's just, people asked me if I was nervous, and like beforehand, just a little bit, but like during, I don't know, like it's just talking to a just normal human being. And I don't know how many CEOs can pull that off because I mean, most CEOs are not normal, typical, and I don't think Vlad is either. But he comes across as just of course, a genius in many ways, but a regular, ordinary guy. So just very conversational, flowed from one to the other. It's my first time doing that kind of an interview, though. So I was like, looking back on it, I'm like, okay, maybe I should change this and switch this. And I definitely need to move my camera and do this. But no, it is an awesome experience. Every question I asked him, he answered. There were a couple of things that legal said, hey, could you remove like this sentence here and this paragraph here? And of course I did that. But I just loved how open he was and, available to us as retailers. That's not the norm throughout the industry. Hopefully it increasingly is, as Alex Karp, showed good success with Palantir doing that. Vlad, I think, with Robinhood too. And would love to see that with other names we cover.
Did you think anything different of him after the interview, or kind of the same feeling as normal?
Since I've talked to him, at the different events that we've had, a fair bit, those were kind of changing, like in my perspective of Vlad. But like this is like, I feel like I kind of know the guy now, somewhat. So like nothing really huge shifted. Just it impresses me how he's able to talk across multiple disciplines. Like he can switch up things and talk, as not just an amateur, like I can about AI, but he's like, no, he knows AI. He has an AI startup, mathematics, boom, chess. We didn't talk about chess, but Tanner and he talked about chess a little bit before. And like, he's a polymath. Like he's good at so many different areas. And it's just very impressive. Like, I don't feel like that there's a single question that I'd ask and it would just throw him off guard or anything like that. It's fun. And just getting that big picture, like from the investor day, and then like having a few follow-up questions from the investor day for this was just so nice to see what this broad vision is, because he's a natural visionary. He just, he's thinking about the future and how to plan it. They have a good plan of attack. And I especially like that he answered those questions on the culture of Robinhood too, just how he guards against doing too much personally and also as a business, what keeps their focus and their energy. Because a lot of times what happens is, and we see this with some of the big names that have run over the last couple of years, hopefully not Palantir, hopefully not Robinhood, but a lot of times when these folks that have a lot of stock-based compensation and the stock just flies up, they're like, well, I'm set. I'm retired for life. I'm done. And I know that there will be some of that and people deserve to do that. But if you lose too many people that were there, for the last 3, 4, 5, 6 years, it hurts. It hurts the culture and it hurts the company a lot over the short term. Yeah, but it was a great interview. It was a really fun experience. And I think that, at least I was told, Tanner was telling me that it was a requirement to be on this show as a regular to actually be able to do that interview. So no, just kidding.
I was like, I did not. No, it was a really great interview, and I think that you're going to always pick apart some of the things that you did. But honestly, whenever I watched it, I remember you saying, "Oh, you wish you switched some things around or whatever." But I didn't pick up on any of that. I just thought it was a good interview and learned a lot. And you covered a lot of great questions that hasn't already been covered previously, which is sort of hard whenever he's doing sort of a media tour in some of these times.
Yeah, it was kind of funny because I think he had 2 interviews. Like he has these things back to back, and I think 2 interviews came out just before mine. I'm like, oh man, I hope not too many questions I asked, because it was already recorded. I was waiting for legal to review. We're also covered, and I think there was maybe 1, but that was it. And of course, the surprise of crypto being deployed on Legend was like, well, it's already old news now, but hey, I'll take it.
Yeah. You didn't know at the time.
No.
I also think when you do interviews, like after you find every single reason why you could have said something a little different, but like, that's just how it goes in the moment.
Yep.
Okay, so let's get into our first topic of the day, which is a very important one. I definitely had a bit of a take on this, so let's key up the topic and then we'll keep going from there. Robinhood, New Year's Eve, you had to be on the app at the time to get something from them. It was some surprise. We didn't know what it was. It turned out to be $2.5 million of Doge. Anyone who was on the app at the time got a chance to be there. About 450,000 people were there, which is why everyone got $6. And then a day later, they surprised us with another 2.5 million only for gold subscribers in Bitcoin. And everyone got about $8.29. So about 350,000 people were there. Overall, they gave away $5 million. And it was kind of a thank you from them to all the people that have been using the product this year. Tanner, we'll start with you. What was your take on this giveaway?
A small fee to say thank you, split across 2 quarters, did not hurt the numbers too badly. And it's a requirement that you need a Robinhood crypto account. That's really what I think it is. Take advantage of some cross-sell. Well, the market is really hot. I think that probably more than 50% of their revenue this quarter is going to come from crypto, a new all-time high. So it is a crypto quarter for them, and that could be going forward, but that's probably going to be the case for Q4, and they're just cementing it if it does happen even further going forward.
Roy, your take?
Yeah, no, I thought it was fun. And the nice thing is Robinhood's at the point where they're just printing money, and this, they're cyclical. So this is like full cylinders is what they're running on. And so whereas like 2 years ago, if they had a lot of cash, but they weren't printing money at that point, if they're giving away $5 million, I'd be like, well, hopefully it pays off. And here they can just do that, and it's pocket change compared to what they're actually doing. I did see, of course, the dates. Tanner noted this as well, where it fell 2.5 million. That's falling on this past year, 2024, and 2.5 million in 2025. So only half of that will show up against quarter 4, and the other half in quarter 1, which is a nice way to do that. And I did also see some people that said that they subscribed to Robinhood Gold just for that drop. So it was interesting. So they must have already liked gold, known about gold, and just said, you know what, that's a cherry on top. It's like basically 2 free months. Why not? You do have to be a gold subscriber for, I think, a year to retain that. So if you stop, you're not getting that. But no, I liked it. Of course, I was able to grab both of these. Did you get any, Amit?
Yep, I got both as well. Yep.
All right, Tanner, you? Oh, that's right.
Yeah, I missed out on this time. I was busy, but yeah. No, just Canadian. That's all. Just punished for where I was born.
Yeah.
So my take on this was that this was genius. This was marketing excellence. This is why I invest in Hood and why I'm not selling my shares. Like, to take risks and to do stuff like this, you got to have balls to go out there and try and see if this is going to work, if this is not going to work. Are people going to be receptive to it? Are we going to give $2 million to one guy, or are we going to actually have an audience that's going to come and split up the pot?
Didn't they give $2 million to one guy? I'm pretty sure they just did.
What are you talking about?
Trump.
Oh,
sorry, sorry. Go ahead.
That's good. It's a good point. They did. Yeah. Well, that's true. They did give $2 million. We should talk about that. But in general, I think most people that critique this miss the point. And they missed the point so badly. Like, I was astonished that some people actually were like, oh, it's only $6. I was just like, what? How could you think the $6 is the problem with this versus the fact that 500,000 people on New Year's Eve, when everyone's drunk, out, getting wasted, spending time with family and friends, they're on their phone because they care that much about Robinhood's Dogecoin giveaway. Like, this was the most genius way they could keep people engaged on a day where the market was closed. And to Doug's point, who's a friend of the channel, they got people to get Bitcoin or Dogecoin, which means now they can send you crypto push notifications.
Yeah.
And if you hold it and you probably care about Bitcoin's price because now you have some Bitcoin, it's another way to keep them engaged.
And as Sadiq says in the chat, that $6 could grow. All right.
It's up today.
Yeah, will grow, but yeah, I can't see it right now, but I saw one of Vlad's replies or comments that said something about, you may have gotten used to us offering matches and incentives to new customers. These are all about our existing customers. And so it's just kind of nice to also throw a bone to those of us that have been with Robinhood for a long time. It's $6 and $8 or $9. It's not like the end of the world. It's nice. I like
individual people are allowed to be upset they got $6, but investors, people that understand like companies and how companies grow, I was shocked that those people actually scoffed at this. I was just like, no, like an individual person can be mad all they want, but if you're an investor and you're analyzing a company's go to market, this was genius. This is the smartest thing I've ever seen on New Year's Eve. And it shows that 2025, I think they're going to have more in the tank in terms of these surprises because they're seeing that it's working and they like getting people hyped up and they know we're going to cover it. And they're just going to keep doing more and more of these this year.
Yeah.
Okay, cool. So that's what we had in New Year's Eve. Pretty cool stuff. This is another topic that was really interesting and curious what you guys think about this. So someone tagged us in this. They found some product manager description for a new job that Robinhood is hiring for. And this is what it says. So the Robinhood's value of radical customer focus helps us to drive and build innovative product experiences, services, and capabilities that help customers succeed at every level. As the product manager for Platinum, which is the code name for some product, you will be driving the strategy and execution of new product experiences and internal capabilities that will grow one of our fastest growing customer segments, high value customers, aka people with money. So, Roy, let's start with you. There's two questions. Would you pay $20 to $50 a month for Platinum versus Gold? B, do you think this could be successful if they have another tier for subscriptions?
I don't think it's for subscription, but
yeah, Tanner had actually, I'm going to punt over to him if that's okay. We discussed this last Friday, and he had a theory that I had not considered, and I think that there's a lot of merit to that, especially given the wording of that that they're looking for the role. So Tanner, if you want to share your theory, and I give it the thumbs up.
Sorry, is that the link I just sent you?
Yeah.
Sorry, that was they changed the link. That was the old link for that Platinum thing. So
Okay.
yeah, don't worry about that.
Gotcha.
I will share my screen though. This is Wealthsimple in Canada here, and they don't do tiers by subscription. They do tiers by assets under management. So 100,000, 500,000, etc. It's my belief that I think Platinum is still probably going to require some level of a gold subscription, but or maybe they might cover that charge, but could offer better pricing, better APY in the checking account or money management accounts, or better customer service, travel rewards, whatever. They could do so much without charging more, because Roy said this on a podcast that we did before, is that like, what is democratizing finance if you have all these tiers that are going to charge higher and higher and block out some other people? This is sort of a way of offering higher support for the people who have higher needs, but is also, potentially not blockading someone in a way.
So you think if you have like a couple $1,000,000 on Hood, they would allow you to join this Platinum? Would they charge these people, do you think?
It would not. I wouldn't think so. I think that they're probably making a higher amount just because of the assets under management, larger trades, more options contracts, more deposits. So like Wealthsimple, they give all these better benefits, higher rates, higher everything, but they're not charging for those. They're just unlocked once those people have more money.
Yeah, and I'm guessing that they still do the basic gold subscription, like you're paying that, but yours is platinum because you have X amount under management. Maybe it's 100K, maybe it's $1 million, maybe it's $12, probably not $12. But whatever added incentives that they have or better margin rates or who knows, it'll be attractive for those that are the wells that they want to land. So I like that. If it was instead a multi-tiered subscription service where you have gold here and platinum here and maybe diamond later or diamond hands, I don't know. But I don't like that as much, especially given their mission of democratizing finance. Whereas, a $5 tier and that's it is very accessible for everybody. And Robinhood wants everybody to eventually have, that platinum tier, whatever that is, just by helping you and giving you the tools that you need to succeed as you're a trader or an investor.
Yeah, I think that makes that sense. I was thinking of it from a subscription perspective, but it makes more sense if you've got a decent chunk of cash in Hood, then they can just service you better. They can probably give you a agent to pick up your phone, because not every single customer needs someone to be on the phone with them for like the smallest of things. But if you've got a ton of money, like, you deserve to have someone who's willing to talk to you 24/7. They can probably give even better margin rates. So yeah, I think that actually makes a lot of sense. So then the question is, do you think they roll this out this year, or do you think they try to work to perfect it?
This is Robinhood. They're rolling it out this year.
Yeah. That's a good take.
I mean, like,
right.
honestly, if it was SoFi, I might expect it in a couple of years. They'll want to make sure it's perfect before they launch it. Robinhood, they're just going for it right now. So
Yeah.
That's the question. Does SoFi come out with options first, or does Platinum come out first?
platinum.
We give SoFi so much shit for it, but like no one's trading options on their platform. It's like not even that serious.
Yeah. Well, I mean, they did lose, a few people that I know personally just because they didn't offer the level 1 options. So, but yeah, those that are remaining, obviously they don't care about options that much as far as level 1s at least. So it's fine if you're that kind of investor, and there's nothing wrong with that. That's a good strategy.
Yeah.
Yeah, I do see a comment, a couple of comments on stepping up the dress code. This is A, what I wore to work today, but B, I was like, Robinhood is in the 40s and we just kind of need to like class it up. So like 50s, I'll add the tie, 60s, monocle, 70s, top hat, 80s. I don't smoke, but maybe a cigar. No, just kidding.
I forgot. We didn't even talk about the fact that we're up like 8% from Friday. I mean, any reaction to the stock price here and the movement?
I mean, a lot of it's correlated to Bitcoin. It had, when it initially began its run, late 2023. That's when it really had a high correlation to Bitcoin, more so than Coinbase, more so than MasterStrategy or any of the miners. It was actually the most correlated equity that I could find. That correlation weakened throughout the year, and I think part of it is they've diversified the revenue. But this quarter, we've already talked about it. I mean, it's going to be, and it's in those December results as well, just a mammoth quarter rather for crypto. And I think this year, they have the crypto event that's in Europe later in this year, and I think they're going to add a lot more cryptocurrencies. I think the analysts are excited about that. I've seen a lot of price target upgrades as well, but I mean, this year to date, yeah, I had to look 10.82% year to date.
Wow.
That's not bad for just a little bit through January.
That's not bad at all. All right, so let's transition then. Or go ahead, Tanner. Go ahead.
I would love to talk on crypto volume real quick.
You want to get into December? Because that's what I was gonna.
Yeah, sure. Go into December, and then we'll track on into January.
Okay, perfect. No, that's a good idea. So we got December numbers, really important numbers, and we didn't know we would get these, but obviously Robinhood feels confident enough to give them out before the actual metrics come out. Equities, 137 billion, a little bit less than November. Options, 150 million, about 5 million less than November. And then crypto, 28 billion, about 7 billion less than November. I think the point is December, and this is excluding 2 more days of trading, but in general, we needed a November type of month or something very close to it. And I'm pretty happy with the month that we got, because it looks like we're going to pull in around $875 to $920 million of revenue if the numbers are correct. and that's going to be pretty good for Hood. Now, after we got that, we got a $54 price target from Piper Sandler. They reiterated, and they said before the open on Tuesday, Hood announced December today trading volumes. The most surprising data point to us is the resilience in crypto volumes post-election. Crypto volumes declined just 20% from elevated November volumes and came in 2x higher than our previous estimate. What's more is that CFO Jason Warnick announced at an industry conference earlier this month that Hood had continued taking price in crypto trading, going as high as 55 bips on their take rate versus an average of 42 bips from last quarter. Bottom line,
I didn't even remember that.
Yeah, that happened. You streamed that conference, Tanner.
I did. 55 basis points?
Yeah.
That's nuts. All right, sorry, go ahead.
No, it's definitely getting Piper Sandler excited as well. Bottom line, we are raising our 4Q 2024 EPS estimate from 33 cents to 47 cents. We're increasing our 25, 24, and 26 EPS estimates as well to $1.03, $1.16, and $1.33, which represents 42 times our 2026 EPS estimate with a price target of $54. We maintain our overweight rating. So I guess, Tanner, let's get started to you before we get into the January numbers. What were your thoughts on December volumes, and what do you think about that price target as well?
Disgusting. They're in a good way. Unbelievable. I was blown away. You said you were right. There was 2 extra trading days on the equity and option side, but there was 4 extra trading days on crypto because that's all through the weekend.
You're right. I forgot. Yeah, you're right.
So the only thing I was really bullish whenever I looked through these numbers. I'll just show it here really quick. These were the numbers that they shown off comparatively against every quarter that we've seen before. And there was a couple extra days. So you can see how many days crypto has been trading for, how many days equities have been trading for, take the averages, add on the new days. Now the back half of December was much lower than the first half. So this is probably incorrect in terms of the potential new ads. But if it was flat throughout the whole month, it would come in somewhere around 32 billion for crypto. Let's park it somewhere in the middle and say it's 30 billion. Okay. 151 billion of equities and 165 million contracts traded for options just with the extra 2 days. That's what that does. So it is very important knowing that there's only 19 days traded. It's not like we got 27 and then there was only 2 extra days. Anyway, so this is what it added up to. If we take a look here, based on the full quarter, we got $425 billion of equity notional traded volume, 480 million options contracts traded, and 73 billion of crypto notional volume. Now, that is on the more bullish side because I'm including those 4 days at the average. Okay. If we are to skip through and just look at what this does for the revenue side, $220 million in options, $306 million in crypto. Compare that with the rest of their quarters. This is insane.
It's insane.
Okay.
Wild.
You're 5xing what we did last quarter. 5x.
Look at the year over year.
Yeah, 7x, more than 7x. And then equities, 55 million, also very good. So that comes out to $602 million in transactional volume, assuming that other stays it's somewhere in this range. I actually think it'll be much higher. You got event contracts, you have more credit card transactions, these sort of things. So that'll probably be higher. But let's just add in, I was just playing with this, guys. That's on 42 bips of crypto notional volume. Now, he said they experimented with as high as 55. So where do you guys place that at?
Let's do 48 as the average.
48?
Yeah.
Okay. Now, how much do you think that's affected their total transactional volume for the year?
It would have to be another 30, 40 million bucks roundabout.
Yeah, I think so.
Yeah.
I think so. 646. If it comes in just a little bit higher on the take rate.
Dude, 646 on just transactions is
just transactions.
And this isn't including those last 4 days. There's no speculation as far as this is assuming 0 extra volume over 4 days.
Yeah. So anyone that takes a look at these charts and it looks like it's not that much higher, this is because I am not accounting for half of these lines. I just kept them blank because we don't really have a lot of data. Even the data that we do have on cash sweep, like these are all November numbers. You know, everything else is blank here. So the only one that I've fully filled out is net transactional volume, and this is unbelievable. It looks crazy to me.
Yeah.
Here, sorry, I'll drop this. That's nuts.
I mean, dude, if the street, and I think on CNBC on Friday, I didn't watch the segment, but there was a segment where the whole panel was bullish on Hood, and they were like, they're just executing so well, and they recommended deploying net cash, like net new cash, like new funds into Hood, even at 41. So you do have some of the street getting excited about it. Question is if this sucker runs all the way to 50, if they have this big of a quarter, or, and Roy, I'll get your opinion on this. What if they have a great quarter, but Q1 it can't compare to Q4? Do you think the street kind of sells it off and is afraid they can't replicate it?
You know, the price action's always been weird after earnings. We didn't see it this earnings, but we saw it Q4, Q1, and Q2, where they had, especially Q1, or Q4 rather, of this prior year, phenomenal earnings that were not expected at all, and the market sold it off. I think that just because we didn't see that on, I would say their weakest earnings was Q3. Still very, very good, but it was comparably weak to Q1, Q2, and Q4. And we did not see like a massive sell-off like I expected. I think that most of those people that, you know, maybe venture capital funds, hedge funds, institutions, people that wanted to take profit have done so. I think ever since Investor Day, like the tone on Robinhood is like nobody has the velocity of Robinhood in this business. No, nobody does. Nobody can compare. There are competitors, but like these guys are the leaders, and it's very, very clear. I don't think all that's fully priced in. You know, anything can happen, and really for us long-term investors, the ideal scenario is they have phenomenal Q4 numbers, Q1 numbers as well, and the market just tanks them down to like $20. I would love that. I would love that so much. I would probably triple my Robinhood position in a heartbeat. That's not going to happen, but but you know, they are going to get into some tougher comps. That's kind of the nature of the business, but they have so many new product categories that they're coming out. They have 9 that have that 100 million annual run rate. They're adding more all the time. International expansion actually gets real with the UK now because they're launching SIPs and ISAs this year and options. So it'll actually be the complete package versus what they have right now, which people have kind of tried it out and played with it, but that's all it is right now. So as long as the bull market for equity stays intact and we get most of the year, maybe 3/4 of the year, still in a crypto bull market, I think there is plenty of run. They're just going to absolutely print money.
I think that it's funny listening to these two Palantir guys talking about valuation and worried about it. Like, just let it ride. You guys know where this is going. No, I mean, I'm not too worried about it. I think that, like Vlad sort of said during their investor day, this could be a generational pick, and to worry about certain comps being stronger year over year, I don't think that I'm in it for that. I do believe in the great wealth transfer. If there is a sell-off, I'll add, but I'm not looking to try to predict where the company is going over the short terms.
Yeah, that's my take as well. I think Q4 is going to be amazing. Q1, and we'll talk about Tanner's January date in a second. Maybe it's not as good. We're only 6 days into it. And if it's not as good, that's where the street could sell it off, because they could be like, all right, you did great in Q4, but in Q1, we don't think you're going to do as good. So we're going to take it down a little bit. However, and I thought of this last night, I'm like, if you're long markets and you believe in the thesis that Hood is a proxy for markets, which I feel like objectively it is, you could buy any Hood dip if the volatility in Hood is based on market dynamics versus fundamentals. If they actually mess up earnings or something, that's different. But if the market takes a 10% haircut, Hood probably takes a 15 to 20% haircut. And that's just, if you buy the S&P, you buy Hood, and you'd probably just get more alpha when markets recuperate and they go back up, which, history tells us that does happen. So I agree. If we get a sell-off because the market doesn't think Q1 guidance will be as good as Q4 numbers, even though Q4 is going to be a blowout, that's just a dip. That's easy to buy.
Yeah, I do think there's going to be some contraction in Q1 versus Q4 if you're looking quarter over quarter, just based on the crypto volume that we're already seeing just in these 6 days. Might be calling it. Yeah.
Yeah. Let's share this.
I did want to show off on the last slide really quick. I won't bring it up, but the assets under custody is still exploding, and we didn't even get to see December. Like we're probably going to be north of 200 billion.
Yeah.
The account growth is going to be crazy in Q4. Like, oh, sorry, I think I shared the wrong one. Sorry.
And also the 160 to 190 jump in AUC we had last quarter, that wasn't because of trade PMR. That was just because of assets went up.
If we look over the last 3 months, now remember, I'm not looking at the chart. The chart here is showing off crypto market cap. What we're looking at is these white bars underneath. Okay. In November and December, where we saw these two unbelievable crypto quarters, there was crazy volume. You can see this in the second line on the text. So right now it says 267 billion. Okay. Over these last 2 quarters, you could just see like December 5th, $500 billion of crypto volume traded. That's not all Robinhood, but that's spread across the industry, and Robinhood is taking its market share of that spread. Okay. Now, as we go through, there's a couple 400 billions, 300, 200, 100, 300. And then this is sort of the last good day. 394 billion. After this, we start to get into sort of a lull for the rest of December. Okay. Even in one of these places in the last day, and this actually wasn't accounted for in the final days of Robinhood's crypto volume, we got less than a less than 12-digit number. Okay. That's no good. Or sorry. Yeah. 12, 13 digit. Anyway, let's skim this down a little bit. Let's take a look at these final days. As we get into January, we're looking at 100 billion, 160, 140, 100, 94.
Not as good. Yeah.
It's no 500, 400, and it could seem like it's still very high, but these are 4x differences, 5x differences. It definitely is big. So it is something to keep an eye on, because there might be, for the people who care about Robinhood as a trade, that the Q4 numbers between Q1 numbers could be a trade, because obviously crypto is making up for more than 50% of the transactional volume these upcoming quarters, essentially.
Does that go back to last year, January? So I'm curious if there's some seasonality.
Yep, I've got the data all the way out to April 2020 or 2013. So what do you want?
I'm just kind of curious if it was seasonally just a little bit weaker in January.
Yeah,
I looked at the notional volumes. They went down a little bit for Robinhood from December. January was a little bit lower, and I know some of that's, of course, the price and what crypto is doing. But
what area? Control my fingers here at the bottom. The sort of blue.
I'm just kind of curious. January 2023. Yeah, it looks like it's maybe a little bit lower. And January 2022 was higher, so it could have just been, not even a correlation to seasonality, just a little weaker.
Tighten this.
January, yeah, right there, January 2023. So yeah, it's almost exactly the same. 100 billion, roundabout 75 to 100. Well, no, this month is already better.
Well, yeah, because you have to realize like how small the market was back then. Like,
yeah.
Like Bitcoin wasn't at these levels. You're even looking here, like the overall market's trading around 1.2 trillion. Okay, in this high line here. 1.2 trillion. If we expand this out to today's numbers, we're looking at breaking 4 trillion at certain points.
Yeah.
So that's also a big factor.
The other thing to keep in mind too is Robinhood is adding additional cryptocurrencies. So even if Bitcoin is the main one, Ethereum, they already have like the most important ones as far as volume. But as they add more meme coins or non-meme coins, it'll add some to volume. But it is interesting to look at. I think that's a good point, Tanner. Little too early to tell if January, February, March will be weaker or not, but it's really hard to compare with Q4 crypto revenues.
Yeah. But honestly, it is a pretty good, like so far as we've been going through those metrics, and we saw the November numbers, and December was looking as strong roughly. We saw an as strong quarter, or an as strong month between November month over month to December. So keep an eye on total market crypto volume, because it's so far a pretty good metric for me.
Yeah, I think there's two other things as well. So like Bitstamp is going to, I think, be approved in the next couple months, which means crypto volumes won't just be people trading on their app in the United States, but it'll be 50 countries across the world that have access to Bitstamp and some institutional products they can offer to institutions in the crypto world. So that should increase volumes and help stabilize a little bit of the overall trading volumes volatility. And then number two, I do think it's important for people to realize that Q4 could be amazing, but this is still a cyclical stock and a cyclical company. And if Q1 doesn't look as amazing as Q4, street prices in future growth, and they might not get as excited. And although maybe it should explode to $50 after we see the numbers, it might not do that if Q1 doesn't look like they're going to replicate those numbers, even though their Q1 of 2025 probably will be better than Q1 of 2024. But that is always the risk to dealing with Hood. It's just long-term because of their innovation and their diversification of services and products. That's what makes it exciting to hold this name, so that when things do get exuberant, Hood can capitalize on it, right? Even if it's only exuberant for 90 days.
Yeah, so, it's because of that long-term picture that I've actually started just DCAing and weekly to Robinhood. It's the only company that I'm currently doing that every single week. In fact, it's the only thing that I bought in January.
Wow.
Not a lot, but it's a little DCA here and there. So
yeah, I'm excited for Bitstamp. I think the real exciting part is going to be the new features, the new products, the stickier crypto customer. But I just don't believe in some of these comments where people say, oh, well, now they're going to get, I mean, I'm excited for institutional clientele, but it's not going to change their market share, their total earnings in crypto. Like it's barely going to move it.
Yeah.
So, yeah, some of those you got to watch out for. Look at Coinbase as a sort of easy proxy to understand that. Is just look at the total amount of volume that flows through their business, which is institutional. It's like high majority institutional. And then what percentage of that makes up for their revenue? It's such a tiny part. So the tiny bit of retail that they do is the high majority of their transactional revenue.
Right. Yeah, and I'm excited for Bitstamp as well. It's not going to really change trading volumes, but it will be their first step into finally establishing, a crypto business outside of just like people buying and selling Bitcoin. And so
yeah, better pricing for them. More liquidity. So, like, I think the people who will use Robinhood or potentially want to take Robinhood crypto even more seriously may do that. Some of the more serious people, more coins on platform, which means people who are sticking to Coinbase could end up switching. There's a lot of reasons to love Bitstamp, but yeah.
I think that this year is just going to be transformational in crypto with Robinhood. With the part of it is the Bitstamp acquisition. Some of it's the stable coin that they're involved with. It sounds like a lot of things that they're probably going to mention or launch either prior to or during the crypto event that they have mid-year. And they know that crypto is cyclical. So I think that a lot of the focus and the things that they're launching that they talked about in Investor Day are going to launch relatively soon. I don't think they're going to wait, 3, 4, 5 years and see what the thing is at that point. But in a lot of it, maybe some of it is even just waiting until Trump is confirmed and Gary Gensler is gone. And then they have, of course, as they have more sane crypto regulation, there's going to be a lot more openness towards crypto as a whole. I'm very curious to see where that takes it. Plus, with tokenization, with crypto as a service was one of the things that Vlad mentioned that we talked about a little bit. There's a lot going on with crypto that's more than just having a platform where people can buy and sell Bitcoin.
Your boy Tanner tapped out.
He's just mad that he can't use Robinhood as his main.
He's mad he can't use Robinhood as his main platform. Now he's back.
I was sick of it.
You were sick of it. All right, let's transition to this last topic. Then we'll do some quick questions. Looks like Robinhood's going to be charging another cent per options contract. Right now it's 3 cents. It's going to go up to 4 cents. And they said in a email today that it's about regulatory fees. So it begs the question, two things. A, should Hood actually be charging pennies on these contracts to make some revenue? And B, what do you think the users would feel like, even though it is a lot cheaper than Schwab at 65 cents, but do you think users would be okay with paying for trading options?
Yeah, I mean, it's still as cheap as it gets. And having to pay the regulatory fee, that's fine. It's not a big deal, big issue at all. I don't think it'll change the opinion of Robinhood for anybody. If 1 cent does, man, either they're doing a whole lot of volume or they're just really, really a penny pincher. If it went from 3 cents to 10 cents, that might be higher. But like even still, I think Webull charges 5 cents, so a little bit above and beyond the regulatory fee. And Robinhood, that'll bring them to 4 cents, so they'll still be under that.
Do you have the fee structure, the fee schedule? Sorry, for Robinhood, their new one.
I don't.
I'll share my screen.
Why'd you ask me if I had it? If you had it?
Well, I just thought you're controlling it, and so it's. I don't like having to share my screen if you can, because you can control whether it comes up or down. Or
okay, go ahead. Tell us about this.
No, this is just the. This is exactly what you're looking at, except it doesn't just say 1 penny. This is exactly how much they're charging.
So 4 cents per options contract, basically 0.0116 for equity. The equity sell, dude. It's such a small fee.
Yeah, but it's rounded to a penny and no greater than 830. So it is high. It is 1 penny higher.
Right.
But yeah.
Yeah, here's my take on this. I think that, first of all, Robinhood's not going to make any additional money from this extra penny. So we're going to have to pay 4 cents instead of 3 cents. It is what it is, but that money goes to regulatory fees. If they did charge a penny or 2 pennies, I don't think anyone would complain, because where are you going to go? Schwab, Vanguard, Fidel, I mean, like these, they're in the 50 cent to $1 range. So if Robinhood were to charge 2 pennies, that would be massive for the volumes that they do, at least another couple million per year in revenue. And B, would we really care about 2 pennies? So I think it's a smart thing. I think they would piss some people off, though, because people got used to like not having to pay for anything on Hood. But as an investor, I don't think it would be a horrible idea.
I mean, they might all go to SoFi Invest, and oh wait, they don't have level 1 in options, so never mind.
Isn't this what always happens? Like companies disrupt, amazing pricing, take all the market share, and then slowly make the fees just a little less competitive.
Yes.
SoFi for days, or for years and years and years, no origination fees. Now they're clocking like $400 million a year in origination fees. But that's what happens. Like,
it's the nature of things, and competition though does bring better opportunities for consumers. So, and I think Robinhood, that's one of the things. Like somebody asked me, maybe I think right before we went on the vacation, or maybe it was right early on in it when I still had good internet access, what I thought on Robinhood, like if it was a net positive for consumers. And I was like, yes, I don't see how anybody can argue otherwise. And I know people bring up like GameStop, or they'll be like, well, payment for order flow is not good, or gamificate. Like a lot of that is like the person even mentioned confetti. I'm like, they've not had confetti like for 3 years. You're bringing.
I miss the confetti. I would love to have confetti again.
I was hoping that would be what it was in New Year's. The surprise, like surprise, you got confetti. Like yeah, not really, but I'm like, okay, they disrupted the industry to the point where regular everyday Joes like you and I, and everybody that's watching, or most folks, maybe there's some mega whales out there, have access to phenomenal trading platforms, not just at Robinhood, but others that charge little to nothing, that offer a broad array of services very, very inexpensively, and oftentimes give you money to switch over to them or try them out. That didn't exist much at all 5 years ago. 10 years ago, it was unheard of. And they've disrupted the market to the extent where stock exchanges are looking at going 24/7. So it's hard. You may not like some of the products. You may not like some of the things Robinhood does. But just because of the nature of competition, and they're a major disruptor, they are a net positive for consumers, undoubtedly.
100%. Do you know how many hundreds and hundreds of dollars I'd be paying a year in trading back whenever I'd be with TD and they charge me $10 a buy, $10 a sell?
Yeah.
It's I did that for years and years. Like, terrible.
People comment this stuff under my Hood post sometimes, and at this point, I just give them laughing emojis. Like, and then they get more pissed off, and then I give them more laughing emojis. I'm like, you're like not a smart person when it comes to this subject. Like you're just not complaining about GameStop, complaining about gamification, all these things. Like people don't look at the alternative. The alternative is a world in which you pay $10 a trade. It's like no one wants that. And it's not just on Robinhood. Robinhood forced all the other guys to capitulate to their model. Even if you don't use Hood, you benefit from it because of how they push the industry forward. So
yeah, it's not free, right? Yeah, but it's way less than what it could be.
Yeah.
And like the other thing too is like they really have helped drive people towards the markets in general here in the United States. They're not the only ones. They're not the only reason why, but participation in the stock market is a lot higher, and it keeps going higher every single year. And that's not the case in every country. It's actually kind of a unique phenomenon. It helps that the stock market's doing well, of course, but even when it's not, like overall, the trend was very, very clear. And part of that certainly is Robinhood giving access to that, even to the point where you take a product like options, which were not popular among retail at all. I think they're maybe a little bit too popular right now, but hey, it's great to own Robinhood for that reason. And it'll be interesting to see what they do. I saw mentioned in the comments, somebody mentioned that their dad, I believe, transferred over to Robinhood and is considering or thinking about buying crypto for the first time, has never bought crypto before just because it's there. Futures is coming, this year, and we'll have to see, what retail participation looks like in that. I'm going to be very careful with it myself because it is a levered product, but that may be one of those things where retail has like basically no participation to, it begins to grow and people become competent and they do well in it. So hopefully that's the case.
Yeah, and this one I like as well from Spencer. Even if it was gamification, who cares? We have free will. Not everyone's going to agree on this because everyone's going to say, well, Robinhood has responsibility. And I get it. I'm not saying they're absolved of responsibility. But dude, if you lose money on options, it's a learning lesson. If you lose money in the market, it's like, it is what it is. And obviously Hood has to take some guidelines to make sure like you don't absolutely nuke your account and stuff like that. And there's certain precautions they can take. But at the end of the day, if you're going to be in a big boy and play in the markets, you got to be ready to deal with the volatility of the markets. Hood's just getting more people into the markets, which is net good. Because if you're not in the markets, I mean, how are you achieving some level of financial freedom outside of your salary?
Yeah, it's a weird balance to strike between like, the layman needs disclosures to understand that they can lose everything, that these are high risk products. And like high risk doesn't mean a 10% chance. High risk could mean 80+% chance of losing everything, depending on the security that you're putting it in. And then in the other side, then they try to go more the disclosure route. And then you have the people who are more advanced going, hey, can you stop bogging down the entire website with disclosures? We get it. We're adults. We understand that I'm risking all my money, but I like this game. And both are right.
Yeah, that's fair. All right, we'll end out with some Q&A from the chat. Tess says, Tanner, what do you think about the eToro IPO this year?
I'm super freaking excited about it. More competition is greater for everyone. So if for some reason, whenever the S1 comes out for eToro, that this is such a better business than Robinhood, that will be better for all of us. Okay. I'm not married to Robinhood. I'm married to, the gains. And so if I find out that there's a better investment, cool. What I actually think it's going to do is highlight the strengths that Robinhood also has. And this is how you can get, a premium on a company whenever you compare like a lending club to SoFi or something like this. Is like some of those comparables are really good because you can see what they're doing differently and why they deserve a premium for those things. So, yeah, any company that goes live, I'm super positive for. I think every company that is looking for outside investment should be public.
Okay. Roy, any quick thoughts on that?
Yeah, I mean, more competition is good, and then you'll get a good look at what the internals are like that. We have IBKR and a couple other platforms, but there's not, just having a more transparent way to actually look and see what the other brokers are doing and why that's going to be really, really good for us as consumers. I think as investors, it will highlight Robinhood. And Webull is supposedly going and doing an IPO too. So yeah, at least that was the news last year. I don't know if that's still the case, but I haven't seen any pivot away from that. So that'll be a good thing too.
You know what's funny? IPOs are good for brokerages.
Oh, yeah.
Right.
So they're going to benefit.
Yep. Drew says, any expectations for OpEx guidance in 2025? It's a good question. OpEx right here is going to end the year at, I think, 1.8 billion, 1.85 to 1.95 billion. And they had 397 million over the past in Q3. I don't know, but if they can keep it below 2 billion again, I think that would be a win.
I think the only thing that they're going to push into is sales and marketing. I think that'll continue to climb.
Mm-hmm.
And we also forget why a lot of the growth happened this year. It's like they ramped sales and marketing. I think they did an extra 100 million of S&M, and now they are reaping the benefits of that. Like, I think that should continue.
Yeah. The other thing too to keep in mind, I don't know what Bitstamp. Can't remember. Is it Pluto, the AI company that they acquired? Like they'll have some additional revenue for those employees. I know. At least I saw someone else that was an employee at one of these places post just not any specific information, but just information that people there had received their offer. Like this is in December. From Robinhood, basically saying what it was, and it was an article. It was a news article that was out actually that had a lot of different quotes and stuff. It's pretty interesting. But bottom line is, most people are like, okay, that's a pretty good offer. They pay people well. Hopefully, they'll retain the talent. I asked Vlad for a reason about AI and culture, not just because it's interesting, but as they implement more and more AI into their system, like that's really usually quite good for OpEx, because you're able to multiply what individuals that are already talented can do. And of course, you can pay them a little more as a result. But I think that we'll see AI agents really continue to ramp throughout Robinhood. And so I think that those costs will be relatively controlled. They'll need to increase it in some areas, especially as they go out after some different ventures, and through those acquisitions. But they're very, very disciplined here. So it makes it pretty easy to just buy and hold long term.
Yeah, again, the OpEx was up this year primarily because of marketing expense. As long as that stays stable, we should have the same OpEx. And if they increase it, it's probably for a good reason, because these guys know how to spend money.
Yeah, there was a slide too in Investor Day that they said 90% of their costs were controlled. They were fixed costs. So those might change, over time as things are renegotiated or whatever. But largely, even as volumes ramp, as more and more is done through Robinhood, their costs are going up just a little bit, even while revenue is just skyrocketing. So it's great. That I believe they're over $1 million now revenue per employee. I know that they are actually. They hit it last quarter, 2 quarters ago. I think that we're going to continue to see that number climb.
So Seeking Alpha earnings expectations went from 650 million to 820 million to 850 million. Today it's updated to 888 million. They are expecting decent amount of revenue for the fourth quarter.
Not just for the year.
Yeah, Nathan has a fun comment. Maybe we do this. Because the three of you provide your best estimate for total revenue. I know if all three of us looked at the numbers, we could probably come up with a really good, accurate number. But off the top of your head, you want to throw it?
I saw that comment a while ago, and I've been working. So give me a minute here.
Tanner's a piece of shit, bro. Tanner's actually a piece of Tanner saw the comment. He was like, I know Amit's gonna ask this. Let me get my number. If I spent as much time Tanner spent, I probably would have a good number, but I'll throw a random one out there.
I'll throw a not so random. I'll say 920 million.
Dude, I was gonna go with 927, but I feel like I'm gonna go with 927, but I feel like I'm lowballing it. But 927, that's it. That's my number. All right, Tanner, give me your.
Roy, what'd you say?
920. I don't think I'd love to see them get to $1 billion. I don't think that they do it, but
I don't think
we're including contra revenue against it, right?
Yes.
Okay, perfect. Yeah, 920.
Okay, I will include contra against it and say 950, and it would break $1 billion if
without contra.
Without contra. So I'm going to say 950.
I think Tanner's going to be right.
What I did, if you guys want to know my simple math here, I looked at net interest revenue as a percentage of assets under custody. Took the average out of all the quarters recently, which came out to about 0.18%. Shot that across. Sorry. shot that across the new quarter and assumed about 200 billion of assets under custody. And I got $350 million of net interest revenue and $640 million of transactional based revenue. Slap on 50 more for other revenue and then take it off because of the contra. You get 950.
There you go. 950.
Sorry, guys.
That was a great comment.
I literally didn't see the comment while you guys were laughing, and then I'm going through my stupid explanation, and then
Were you thinking, are these guys laughing at my predictions?
no, because you guys both muted, so I didn't even know you were laughing. I just thought you guys were listening intently.
trying to not die from laughter.
Dude, when they do 950 million in revenue, like, fuck, bro. Like, that shit, dude, that's $1 billion in revenue. Like, I can't imagine how Vlad's gonna feel that, dude. That's like wild. How the OG employees that have been there, Akshay, I mean, that's gonna be wild, bro. It's gonna be crazy.
Do you think that's a bad way to look
Or
at
not
it?
Akshay, his name is Abhishek. Akshay is a Palantir. Abhishek is at he's one of the lead PMs.
Yeah.
Abhishek. Abhishek, Rookie, one of the communications, like all of them. I think they were there in 2021 when shit hit the fan. It's gonna be a big moment for them.
Yeah.
Am I being too terrible with my spreadsheets, or can I show you guys?
I don't know.
Is it
Let's see
bad,
more.
or do people like it?
Oh, dude, I think people put a W if you love the spreadsheets, because I love the spreadsheets.
Go full bore into the memes, that Mr. Spreadsheet. So
Okay.
next time I think you need a clip-on tie and a pocket protector, but
so it's not based on any math. I'm just sort of trying to find any trends if I can find them. So if we look at net interest revenue as a percentage of assets under custody, you can kind of see this trend here, which is getting really high and then starts to dip lower. This is this bar right here. Sorry, I should highlight this for you guys. It's this bar right here. So you can kind of see, and then it starts to dip down later on into the 0.2, 0.18. I'm just keeping it at the 0.18, but it might even be higher. It might be 0.2, something along these lines. Then I'm taking the number that they gave us in November. If I switch this, if this goes up to 210, something like this, this net interest revenue here. Sorry. Let me just pull this a little bit higher. Something like this. Yeah, it'll be somewhere around 380 for that. To just sort of meet that area of what we saw last quarter. It might even be higher. It might be 420. Like that doesn't look weird against how the assets under custody. And this is more margin, more everything. Like
yeah.
It's crazy.
The one thing that might reduce that is if they spent a crap ton of money buying back shares, but if they only spent 100 million, then it shouldn't have a massive impact like last quarter.
Buying back shares?
Yeah, because if they buy back shares, their cash pile decreases, right? So their net interest revenues technically decrease. But I don't think they bought back that much. I mean, they already bought 5 million shares last quarter. Maybe they bought another 1 million shares again. Who knows?
They probably printed more cash than what they used to buy back. So that's a nice position to be in. This is the article I was talking about, originally on Fortune, but they have the whole article here on Yahoo Finance. Inside Robinhood's effort to retain employees of its 300 million acquisition with exploding offers. Did you guys see this? December 19th?
I did not see this.
I think was I traveling? I don't know. But yeah, it sounds like, they're doing, they don't have a siloed culture at all. And just, this is long. I'm not going to go all the way through that. I should probably post it on X. But it sounds like they're trying to bring everybody there except for like 2 building maintenance guys.
Oh, wow. So hold on. On Tuesday and Wednesday, Robinhood presented offer letters to trade PMRs, approximately 200 employees, giving them until the end of the day. So they're bringing all those people underneath Robinhood, essentially.
They want all of them, yeah. And it sounds like
until the end of the day.
Yes. No, like I think they gave them. I mean, that's less than a week, but I think like the reading from this, the understanding is you're terminated if you don't accept. That's these are exploding offers. Offers are typically used to pressure prospective employees into accepting quickly. It's a fast turnaround for employees to decide, particularly because the pay packages are structured differently from what they're accustomed to. Robinhood offers bonuses and equity determined by individual and company performance as part of its compensation plans. Trade PMR employees, in contrast, are generally paid entirely via salary or hourly pay. Welcome to being a publicly traded company, by the way. However, there's little downside for trade PMR employees who sign the contracts, as there's no language barring an employee from signing, then quitting Robinhood later, according to someone with knowledge in the matter. And so, here's another quote. They offer a lot of stuff I've never been offered before because I've never worked at a Silicon Valley company. One employee said, noting that they plan to accept the offer and think they will ultimately make more money. So, I just thought it was interesting because a lot of times you don't get this kind of glimpse into acquisitions. Like, nothing as far as like who's going to be retained, how many people will be retained, what that'll look like, what that handoff looks like. Are they gutting you don't know. But like here, for whatever reason, we have a glimpse of like they want to bring everybody except for the 2 building maintenance guys over. So hopefully those guys got a little something on the way out. But
yeah, sorry guys.
Yeah, I'm sure that they'll land on their feet. Hey, maybe they can even work for Robinhood in a different capacity. But yeah. No, what this tells me though is they didn't just love like trade PMR for like patents or regulation or some of their existing clients. Like they also obviously saw something with the employees, with the culture there, and they're like, we want all of this under the Robinhood ecosystem, and they're looking to fully integrate them. So I think that this means too that since they're not like getting rid of like all but 50 people and training up some new folks, they're wanting to really take the bull by the horns and run with this.
I came from the industry that trade PMR was from. The people there are, I mean, not from trade PMR, but from that industry are dinosaurs. So I'm interested to see what Vlad sees in that team to do an acqui-hire like this. But they know much more than we do, and the compensation packages will be a culture shock for them, going from that old finance feeling to a Silicon Valley feeling. That would be very exciting. I would accept immediately.
Yeah, I mean, dude, like first of all, they're getting comp, which is different because tech companies give you some comp. I was speaking to one of the Robinhood product managers back in their gold event in March, and I was just like, so what strike is your options at? And she was like, $10. And we just started laughing because Hood was at 20 that day. And we're like, we just knew, like, sometimes you're in the right place, the right time. You sign into a company when they're beaten up. And then, I mean, if Robinhood goes to 100 one day, which I think can happen, and she holds on to all of her shares, I mean, that equity is up 10x, which is crazy, right? So I think those trade PMR employees are definitely going to have a culture shock. But yeah, I'm curious. I agree with you, Tanner. I don't know how this acquisition is going to work, because that's a dinosaur industry with a tech company. And I'm assuming there's going to be some way to make it actually make sense.
I've never really got this acquisition. I mean, I even had a conversation with Vlad, which was on X. And I said it was like one of the reasons why I left the industry. I thought it was kind of like going to die. And he was like, well, it's not going to die. And I was like, okay, you know more than me. But I just don't think people are going to put up with those types of fees. And I don't think people are going to need knowledge work the way that they've need knowledge work now that AI is a thing. I wouldn't pay a super expensive advisor if ChatGPT is the best knowledge worker.
But also, Tanner, you actually care about directing your investments. What about the person who has 10 million on Hood that doesn't care?
What are you looking for? You don't think a robo-advisor can't diversify your assets into other classes?
Yeah, but there's something that people want to talk to someone sometimes, right?
But at what cost?
So, well, somebody in their 50s is not going to want robo-advisors for the most part. There will be exceptions. There will be some very conservative 20 and 30-year-old folks that just don't trust it. So I think that really what trade PMR feels like is trying to diversify, revenue somewhat, but also to be able to retain once the 2-year vesting is basically done with some of those retirement transfers that got the 3% match. When that is all played out, some of those folks might want the directed investment and a more personal touch, and Robinhood will actually be able to offer that without people just leaving the platform. And so I think some of what Trade PMR was a defensive move just to retain that versus an aggressive move like Bitstamp.
Yeah. And look, I guess, they do more research than us on the industry. So I guess they're seeing that there is definitely demand for these advisors. and there's a way to incorporate them. 300 million. I don't know if that was cheap or not. For a tech company, I'm assuming it's, cheap, given Robinhood's almost $40 billion company, but maybe they paid a little bit of a premium because they saw some of their value. But the industry people that talk about trade PMR, because I watched some interviews on them, they think trade PMR is like one of the best of the best. So they do feel like Robinhood got a good company to work with. And now, as long as the partnership leads to more AUC, then hopefully it should be beneficial for them.
That's a similar feeling that I got, is that they're one of the younger players in this old space.
Yeah.
Trade PMR, I mean.
Yeah. All right. That is it for us, folks. Thank you for joining episode number 5 of Hood Weekly. This is the first episode of 2025. So Happy New Year to everybody as well. And we will be here every single Monday, even if all of us aren't here. Most likely every Monday we'll be here. And we'll keep covering Hood.
Boom. Thanks, guys.
All right. Everyone's Twitters and YouTubes in the descriptions. Thank you, everybody. We'll see you guys next Monday. Bye, everyone.
Bye.